Welcome, one and all. Welcome, ladies and gentlemen, to another episode of Wealth, Wine, and Wisdom, coming to you mano a mano tonight. And it's going to be a shorter session tonight. But what I'd love for all of you to do is give us a big shout out as you come online. I can see a couple of you coming in there. Let us know that you're here and let us know that where you're coming in from. What I'm going to do, we're going to change this up a little bit tonight. And it's, as I said, it's going to be a far briefer version that we'll chat about tonight. And I'll introduce you to a couple of things that's happening around everything. Jason Witten. I know it says Jason Witten down here. I am in his portal at the moment, but it is just me for this evening. So as you come on board, please drop a note in the chat so that I can see all of you there. And make sure that you give us a shout out as to where you're coming in from. And what I'd love to do is also just set this up for tonight, because next week, we can go through a big Q&A. We've got some very, very cool guests coming on, as I said, in the next few. I just realized I've launched with the wrong title. So it's been Wealth, Wine, and Wisdom, but apparently it says Pay Yourself First. But we've got a whole lot of great special guests that'll be coming on in regards to supply chain logistics. We've got obviously our more in-depth tax planning and budget review that's going to be coming. But please let us have a look at your questions as we go through this. So whack it into the chat box. Let us know that you're there. I haven't seen anything come in as yet. So please give us a shout out so that I know you guys are all there and you guys can hear us loud and clear. As I said, we are currently coming to you from Jason's login, but not mine. So Aaron, thank you so much. I now know that I'm not talking to myself. Appreciate you. So now that we know that we're chatting with everybody, coming to you live from down in Melbourne, as you can see, we're in a lockdown down here. There's been a number of corona cases. For those of you around Australia who mightn't have been listening to the news, and quite often Jason and I tell you to listen to the right news, so it may not have been listening, but yes, down in Melbourne, we are in lockdown, a snap 7-day lockdown. Hey, Catherine, good to see you on the call. Ben, awesome to see you, mate. Hope you're all doing incredibly well. So yes, we're in lockdown. We're used to it now, but it means that we do have our wine for Wealth, Wine, and Wisdom. So for those of you who are dialing in for the first time, Andy Fenton, a background in corporate banking, investment banking, advisory services for small to medium business owners for the last 20 odd years or so. I don't feel that old. And Jason Witten, who is away at the moment. For those of you who know Jason, I'll let you know where he is at the moment. But Jason is in, that isn't him, but we'll say that it's a picture of him. He's on an adventure trip rock climbing in one of the best rock climbing spots in Australia today. G'day, Chris, Naomi, good to see you both. So he is actually out at a secret spot that he might tell you about next week, and hopefully we'll see some pictures. As I said, this isn't Jason, but Jason usually with us. He is one of the key members. He is one of the founding members of Wealth, Wine, and Wisdom, along with myself. And Jason, 20 years in property, residential, Australia, New Zealand. If there's something that is to be known about property, it is in his brain, and we spend time pulling it out. So as I said, Wealth, Wine, and Wisdom is all about giving you information that you need. And rather than just not coming to you live, what I wanted to do was spend this session with you, just a brief session, to gain all of your thoughts and to get your questions out, because we often go to question time, but I'm not sure that we give you enough time to get all the questions out. So what I'd love for you guys to do here live tonight is start to pepper us with all of the questions that you guys have, whether it is personal planning for tax, whether it is things around the budget, whether it is general questions in and around property, finance, business, cash flow management, structuring, whether it's business questions that relate to financial services in some way, shape, or form. How do you manage that? It could even be planning within the business, managing your scorecards, things of that nature. We would love to hear what questions you want answered. What are the things that have been on the tip of your tongue but you haven't asked before? Or what are the things that you were thinking about during the middle of the week and you go, oh, damn, I wish I had the answer for that, but then forgot to ask it? This is your opportunity. We would love to see them coming through thick and fast. So start typing that away if you're online with us tonight. Look, some of the headlines for tonight, or some of the headlines that are happening in and around the world of investments on my side of the equation, while we're waiting for these to come through, is we've seen more of that kind of shift out of the growth stocks in Wall Street. We've actually seen the beginning, or probably midway through that secular move from growth stocks into value stocks, and we talked about that last week, and we talked about how that's providing greater levels of turbulence. But we also spoke about the old crypto race, and how every time Elon Musk has a little bit of a tweet, the Bitcoin market goes absolutely berserk. And if you're looking at that market, and I know that Jeremy and a number of the viewers are looking at it and are investing in it, guys, it is going absolutely berserk at the moment. Massive amounts of volatility. It's got nothing to do with this lockdown. And I am quite literally buffering time for you guys to start to whack in all of the questions that you have. So I can see Facebook user who must be coming in from one of our channels, but I can't see the name, unfortunately. But would love to know all things structuring. We'd love to know is there anything in particular that you'd like to know about structuring? Is it a specific issue that you're having at the moment? Is it something, and I'll just bring the question up so everyone can see it. Is it a challenge that you're having within your structures at the moment? Is it an investment structure? Is it a business structure? What are the things that you're trying to achieve? The more detail you can give us, the more we'll be able to deep dive into it. So please keep these coming in, because I'm going to record them and screenshot them and make sure that we cover these off next week when Jason's back from his big boulder dash in a secret location somewhere in Australia. Evening, Harry, mate. Good to see you on board tonight. Hopefully you are well and safely locked up with the family. Alison, is that Alison? Amy, I beg your pardon. Will the banks increase their lending, i.e. is it purely based on how much money you earn per year, or are there other factors? It's a really, really good question. So specifically, and it would be great to understand in what way you're looking at utilizing that, and what way that potentially might impact you. And if you can send that through, I promise you we'll use these as hot tips and topics to run through. I'll just see whether there's something I can shed some light on that as we're waiting for other questions to come through. And I'll just pop up another question that's come through here in the meantime. So, and just in regards to your question, it would be good to understand if you're talking about the banks on a personal basis, will they increase their lending to other people in the market, or will they increase their book of lending in general? Just wondering whether that's a large macro question or a specific one that relates to you. Another Facebook user, Karen from the Central Coast, New South Wales, a lot warmer than what we have down here. What's your take on the current crypto market at the moment? I'll actually chat to that for a little bit, because it's really quite interesting what's going on. And as I said, I'm not an expert. I do a lot of research in this area, but I rely on my data from people who are far more invested, quite literally, and far more knowledgeable in the area. But if you're just joining in, please, what are the questions that have been on the tip of your tongue that you haven't asked in maybe any of the wine and wisdoms that we've been on? What might be impacting you right now? Do you want to know something about the future? Do you want us to crystal ball gaze on a specific area, whether it be property, investment, crypto, whatever the case may be? So please whack those questions in so we can start to document them, and we'll come back to you next week. As I mentioned earlier, if you've just joined in, very, very different wine and wisdom. Jason is away on a rock climbing trip and enjoying himself, and we're just spending a little bit of time to gather all of the questions that you guys want answered, so that we can come back and do a massive Q&A with all of you next week and serve you, because that's ultimately the reason that we're here. We're here to serve you and make sure that we can bring you as much value as we can. So Karen, and I'll just get rid of Jason out in the background there. It's really interesting. We called it pretty much ever since we started talking about currency. We called it a market that is heavily influenced by a minority of billionaires, and that's effectively what we have seen. And you've heard me talk about it previously, and that my narrow view of it, without a lot of experience in it, is that at the moment the crypto market tends to react with a high degree of correlation based on media from some of the billionaires that are heavily invested in it. Elon Musk, probably the most prolific, and in this case, most notorious. And he came out all for Bitcoin. Bitcoin rallied substantially, made some comments in and around environmental sustainability, which is really interesting. So this isn't the case. This is just a view that I'm starting to look at with a degree of interest to see whether it actually lines up. But so the Bitcoin market, dropped in value significantly over the last few weeks. And it was on the back of a Saturday Night Live appearance where Elon Musk kind of took the piss a little bit out of Dogecoin, and that we saw a big correction in whether it's a correction, whether it's just a loss, whether it's just large amounts of volatility, hard to say. But Dogecoin took a big hit on the back of that satire kind of positioning from Elon Musk. He then came out not too long after with a question in and around the mining of the stock, and saying that this is not environmentally friendly because of the amount of power that it actually takes. And he then is urging the Bitcoin miners to come on to almost like a panel discussion to talk about how to environmentally friendly regulate the mining of Bitcoin. Now, there's been a lot of speculation. Is this just a play to try and control the market of Bitcoin? Is this, which is against the kind of whole idea of cryptocurrencies? When you think about it, it's meant to be deregulated. It's not meant to have a central point of control. It's not meant to be easily influenced by billionaires or governments or anything to that effect. So the part that I'm quite interested in with the Bitcoin side of the equation, and more specifically Musk side, is that it's amazing to me. If it's an energy thing and they're looking about sustainability of the practice, immediately I'm going to go back to, well, what's the solution to this? And I think it's on the tip of everybody's tongue. It's environmentally sustainable energy, renewable energy resources, in order to be able to mine coins and manage that energy use. And so, probably taking one step backwards, Musk was basically saying that in order to mine your cryptocurrencies, and specifically relating to Bitcoin, it takes a huge amount of energy, right? And that energy is not environmentally friendly. So if that were to be the case, and it does take a huge amount of energy to mine these stocks, then one would go, well, doesn't it make sense that that fits into a renewable energy play, of which Musk is well and truly at the forefront of, with his Tesla batteries and Tesla panels from solar? Just a little bit of a conspiracy theory for me, but I reckon it's a great question, Karen. I'm not actually sure whether anybody will understand the full answer to that at this stage, but a super, super question. I'm cool to pontificate about it and look at it, because it's a really interesting area. Having just on the back of that, though, really interesting that trading stock Coinbase actually continues to fail and fall ever since. So CoinSpot, I think it is. It was a listed company at IPO, listed on the American market a month or so ago. We've talked about it a little bit in Wealth, Wine and Wisdom. And it has just been on a downward trend. It hasn't actually kicked; it's continuing to drop in value. But if you can Google this, but if you look at blockchain-based companies that are listed, they're actually going the opposite direction. The blockchain-based companies are actually going extraordinarily well, especially in the US market. So one to look out for. Jason and I have always said that the currency, as far as Bitcoin is concerned, highly speculative market at the moment, largely gambling for us at our level of understanding. But we're not saying that we're experts at any stretch of the imagination. But when it comes to the actual underlying technology, we believe that's going to change the world. So thank you, Karen. Awesome question. Let me have a look through some of these. These are some good questions, guys. So please keep them coming. I'm literally taking a screenshot as we speak, so that we can come back and answer them in detail next week. Yes, definitely keen. How do we start investing in crypto? Actually, you know what? That's a great question. It's not one that I want to really show people that the way to start jumping in with heavy sets of money, because as I said, we don't consider ourselves to be experts in there, but we are getting a cryptocurrency guru, I guess we'll call them, in to chat about the technology itself and the platforms that you can use to invest in them. But to your point, Naomi, we've got, as I said, there's a company, CoinSpot, that actually listed over in the US. So there's a lot of data about this company and about the positives and negatives. There's also a massive underground when it comes to trading crypto. It is becoming more mainstream, and CoinSpot may be a place that you can go to get a lot of data out of it. Have a look at it, if it's something that you want to toy around with. But again, proceed with caution, because super, super highly volatile. But what goes down may come up with a significant velocity. And I must admit, I haven't seen the market in the last 12 hours. Great question. And we'll bring some of those resources to you. And for an investment property, that's awesome. This is an extraordinary question, because we see so much confusion about it. If you guys want, actually, and Catherine, reach back out. We've got some maybe private message us, and we'll shoot you through the business structure guide, which is a guide that we produced in order to make trusts, companies, all of these structures as simple as we possibly can, so that people can understand it better. Ultimately, your accountant should understand it. Your advisor should understand how these vehicles work. But ultimately, the best way to understand structures, in my view, is to get something like the business structure guide, which I'm more than happy to send out to you and anybody who's listening, and then map out the actual structure. So who are all the different people who are a part of the structure? So if it's a discretionary trust with a proprietary limited company, as an example, you want to know who are the directors of the proprietary limited company, who are the shareholders of the proprietary limited company that acts as trustee, who is the appointer of the discretionary trust, or it might be the principal, depending on the trust deed. And you'll find this information in the trust deed or in the constitution of the company. Who is the appointer? The settlor is less relevant. The settlor exists mostly sort of based on the foundation of trust law, which is many, many years ago. But if you understand who's the trustee, which is likely going to be a company, who the appointer is, they're the key roles that you need to understand. So for each of your structures, you at least need to know who the relevant roles are, and then you can start to understand how they work. And happy to go a deep dive into some of that stuff, depending on whether if you're in the positive real estate community, or whether you're in the personal finance community of ours. We can go into a bit more detail there, but happy to send you out the business structure guide. But ultimately, the accountant should be able to explain this to you, and solicitors who have a more financial interest should be very, very strong in it. Just find the people who can talk to you and make things reasonably simple is my guide when it comes to trusts and things like that. And we might even do a bit of a session on them as to how to better use them. So that's an awesome question, and appreciate these coming through. Will the banks loosen lending criteria? It's interesting, because the government was actually trying to repeal the responsible lending legislation that came in off the back of the Royal Banking Inquiry. It looks like they haven't succeeded in doing that. It's a good step in the deregulation of the over-regulation that we've seen. But at the moment, we haven't seen the major moves that we were expecting to come into play in March this year. So we haven't seen that, but we're certainly not seeing the same degree of stringent requirements. We're seeing the banks kind of loosen up a little bit. And this isn't just the banking level. This was actually at an APRA level that was enforced upon the banks. So this is a great one. Jason and I will go into more detail in that next week with you. Let me have a look. And like, so this is to my example, right? So when China said they wouldn't allow the use of Bitcoin 24 hours later, it crashed even further. So this is the challenge with these currencies, is they're so hypersensitive to information that's coming out. And I would venture to say that there are a lot of speculators in the market, more so than people who actually know what's going on. And that's what creates large amounts of volatility. And whoever said that I 100% agree. Don't invest in crypto. Invest in crypto if you want. The golden rule is invest what you can, and be okay if you're actually going to lose that in a big way. If you want to get in there and have a bit of a dabble, I think that it's a very interesting market. But as I said, we don't have the expertise to actually guide you in that. But certainly taking the world by storm. Thank you guys for participating so much in this. This is just an initiative that we thought about while Jason was away, rather than going through the original format that we do every week. We thought we'd get the questions out, and that we can now start to target some of our content for you guys more specifically to your questions. So the more questions that keep coming through, the better. And my promise to you is that we will answer each and every single one of them. If not tonight, maybe we'll paraphrase them tonight, but we'll go into detail over the coming weeks. Let me have a look. Let's just have a look here. David, good to see you. What happens? All right. So your thoughts on the predicted US inflation in 10? This is David. This is a really topical conversation. And guys, keep writing more questions down. This is actually gold, and it's super cool. And I'm super appreciative of you participating. This is so David's question really here is sitting behind the more, not just the US, but the global thoughts of inflation. And so inflation, for those of you, just to simplify it, is the average cost of goods going up in value, right? So milk used to be 25 cents. It's now $5 or whatever the case may be. It's been a while since I bought a thing of milk. I don't drink it. So one would think that I would have used a different example. And if you think that, well, you're probably right. It would have made more sense. But so the average cost of things going up, whether it be lending, whether it be petrol, whether it be electricity, these things, as they become more expensive, they tend to hurt standard investment markets. So the questions that a lot of investors are now asking themselves and are asking of their advisors, and the questions that advisors are asking of the fund managers and of themselves for their clients, is, well, what protects us against the potential of inflation rising? So in standard type of Keynesian economics, if inflation starts to rise, then all other things being equal, we could end up with rocky markets as far as equities and things like that go. Equities being shares, shares being equities, they're the same thing. So stock market type material, probably what a lot of your super is invested in. So if we're going to see inflation spark, and inflation will kick at some point in time, it's just the degree of how much it kicks. And when that does, we will see potentially interest rates rising, and then we will see, either before or after, we'll see effects on the stock market, positive in some stocks, negatives for others. And so what we need to start to look at is what kind of investments actually benefit. And there are 4 seasons, just like there are in the weather. There's a summer, winter, autumn, and spring. And you've just got to understand that as we enter, the inflationary side of the cycle, when that starts to come, what sort of assets do we start to invest in order to protect ourselves against inflation? And a lot of the time, people are looking at real assets quite often being property, sometimes gold, and these types of things. So I think the key part to your question, David, is hype. And so, if you listen and make decisions on hype, then you're a trader, you're sort of a day trader and things of that nature, and people can make money for a period of time out of that. But long term, we find that There's very, very few people who can do this sustainably. But if you're trading on hype and you're worried about the hype information, then the chances are that it's very slim odds that you're actually going to hit the right side of it. I think if you're looking at what a sustainable long-term trend might look like, and eventually we will get into that inflationary cycle. So it is wise to start to look at portfolios and go, if and when inflation starts to peak into the future, or starts to run a little bit more into the future, of which it will at some point, how would I best position my portfolio when we start to get confirmation that this is coming into the market? Now, markets will react super, super quickly ahead of the time, because markets are always trying to see over the horizon, right? And so the faster that a market can be traded, the greater the level of volatility to hype, news, and things that will potentially harm it, right? Because you can transact on that very quickly. Whereas a property market, the ability to transact is a lot slower. So if we do see, or when we do see the inflation start to, or get confirmation that inflation is rising and is a steady rise, then the question is, what would we do in regards to our portfolio to start to protect that? Which are the assets within our portfolio that are going to get hurt by inflation rising and the costs of goods rising for companies and on the stock market, so on and so forth? And what's actually going to benefit? Where are people going to fly to in order to protect themselves against that? Because, of course, in rising interest rate environments as well, if you hold longer term bonds, then as interest rates rise, the value of those bonds actually decrease. So you have a capital loss situation as interest rates rise. And we've done a big session on this previously, the relationship with bonds as far as capital is concerned, because a lot of people go, well, put your money into bonds or fixed interest, you won't lose any money. Well, that's true if you hold it to its duration, which means if you've got a 10-year bond and you hold it every year out to 10 years, then you will get your money back plus the interest that's been paid on that. But if you need to sell that bond over the next, say, at 5-year mark, and interest rates have risen significantly, then you'll actually be in a capital loss situation. So, David, great question. I think that we might bring some of the economists on board and give them a good run for their money, because you know that Jason and I always talk about the economist being the one job where you can be wrong 80% of the time and still collect your paycheck and be thanks for the information that you've been given. All right. Well, ladies and gentlemen, trying to bring down the iron ore prices. We have collected a whole lot of your questions. Please, throughout the rest of the week, keep them coming through. I know it's been a different format, a different initiative, but as I said, Jason is away at the moment rock climbing and taking the weekend off. So we thought we'd take this opportunity to get all of the questions that you have. So if you're watching this afterwards, please whack it in the thread. We will have our team come through and get all of the information, get all the questions, and then we'll start to pepper that in next week when we catch up with Jason for another proper normal episode of Wealth, Wine and Wisdom. I just didn't want to leave you all before saying hello, and a big shout out to all of us in Victoria, including myself, who are in lockdown again. Look, please make sure that you take care of yourself. Check in with others that you know. These can be extraordinarily tough times, and sometimes our brains go to triggering the times of when we were in lockdown for sort of several months. But if you're out and around Australia, please ring and hug a Victorian and make sure that they're doing okay. And for those of you who are homeschooling over the next week, good luck. And reach out for support, because we all need it in these times. And take a deep breath. We made it through many before, and let's hope that it's a reasonably short one, maybe even ending earlier than that it's prescribed for. We'll keep our fingers crossed. But please treat each other well, and make sure, if you're not in Victoria, ring up and hug a Victorian that you know, and well, obviously not literally, because that would kind of defeat the whole quarantine and that. But you guys know what I mean. Ring them up, give them a verbal hug. And for those of you in Victoria, just look after each other and make sure that you make good of the time that you do have in lockdown, because remember, with all of the negative things, there are some positives that come out of it. So let's try and look to the positive side. So that's thank you guys for all of the feedback there. There's a number of comments coming through saying good luck, guys, in Melbourne. So my heart goes out to everybody in Melbourne in lockdown. Look forward to seeing all of you back on the streets behind me as soon as humanly possible. But for now, that's the end of this Wealth, Wine and Wisdom. And we'll look forward to seeing all of you in a more interactive session. Thanks to all of the wonderful questions that you're posting through. Please keep them coming during the week. If you're just tuning in, keep those questions coming into us so that we can answer them for you. Our purpose is to serve you as best as we possibly can. And the more questions we know are on the tip of your tongue, the better we'll be able to serve you. So with that, we will look to sign off from this week's Wealth, Wine and Wisdom. And please take care out there, enjoy it, and ring up and hug a Victorian. We'll see you next week on Wealth, Wine and Wisdom.